What is the cost of a self-constructed asset? When entities build their own property, plant, and equipment, they have to apply the same principles as when they purchase an asset. Does the item or the cost have a future economic benefit for the entity? Thinking about the cost of self-constructed assets, we can consider management accounting. We know in management accounting, when we're determining the cost of any kind of asset, we add in two things: direct materials and direct labor. Both of these things are added in because they can be traced directly to the self-constructed asset. But overhead is more complicated. Only costs that are directly attributable to the self-constructed asset are costs that can be capitalized. What does this mean, directly attributable? It means that costs are only capitalized if the cost was incurred because of the construction process. Therefore, it's pretty rare for fixed costs to be capitalized for self-constructed assets. Why? Because fixed costs occur regardless of whether the company is constructing an asset or not. If that's the case, then the fixed costs are not directly attributable to the self-constructed asset. Let's do an example. Let's assume a company is self-constructing a building. They hire a site supervisor. The site supervisor is going to earn an income of $100,000 per year. And the project is estimated to take 2 years. The site supervisor's salary is a fixed cost. But this cost would not have been incurred unless they were building a self-constructed asset. Therefore, this fixed cost is directly attributable to the building of the building. It can therefore be capitalized. Remember, a cost must be directly attributable in order to be capitalized, and that requires professional judgment.